Welcome to the Toomey Stock Market Report. Today is Thursday, September 22nd, 2022. So, what's going on? Well, I'm James Toomey, and I want to bring to you today a quick snippet about midterm elections. We've been giving you a lot of data. A lot of that information has been on the, unfortunately, negative side, if you will, as far as what's happening to the stock market and prognosis and what our fundamentals of technical analysis is saying. Let's face it, it's been tough. And yesterday, the Fed came out with its 0.75. But more importantly, the Fed reinforced that, hey, we're here to quell inflation. It's too high. We are going to raise rates. We're going to get this rate up to like 5.5%. We feel inflation is probably going to track well into 2025, where we hope to get it down to 4% by then. That's pretty drastic numbers, right? And we're going to have to live with this high inflation for some time. People are getting their new electric rates have gone up, some of the states, and they've actually doubled. So we're in for nothing like what Europe's going through, but we're in for some tough sledding for the next 6 to 12 months. But with that said, and maybe a couple of years after that, and anybody who's lived through the 70s really understands that, because, car loans were 16%, mortgages were 10 to 14%. Gosh, the money markets, though, were somewhere between 12 to 14% on which ones you can get in. That's not CDs, that's not short-term rates. And that treasuries and the likes, that's real money coming out of just savings. So with that said, next report we'll probably go into a little bit more where we can park our money, because this looks like it's going to be going on for some time. With that, though, I want to delve into some potentially good news. And first and foremost, the Toomey Stock Market Report. That's the new website, the number 2 MEstocks.com, Toomey's Stock Market Report. If you go to that website, everything here is on the homepage that you need to be aware of. We've got the weekly video just been updated. You'll get a new weekly video report for those who want to delve into it, on a similar to like a podcast, right? You can view our trades, current and the past several weeks, and then also the free newsletter. On the right-hand side, you'll see where you can receive trade alerts. We just put out a couple today and yesterday. We're looking to add to some of our positions. Others are kicking off on stops. But with that said, very important to be, those alerts come right to your email, real time. Once you take a look at them, you can execute and then go back to your business. So that's the number 2 MEstocks.com. So take a look at it, get familiar with it. It should be your go-to page every day. All right, so midterm elections, what's the impact? This is very interesting. It's something I've been doing some research on. The S&P historically underperformed 12 months leading up to the midterm elections. So I said, geez, that's an interesting stat. And actually, since 1962, 12 months prior to the midterm election, the average annual return for the S&P, 0.3%. That's since 62. That's a long period of time to be fairly consistent. Midterms, every couple of years, right? Well below the historic average. I said, well, what's the historic average been? It's been 8.1%. So very interesting. That tells us, and we're certainly seeing that this year, a malaise before the midterms. I don't think the midterms caused the malaise, but that said, interesting statistic. So, since 62, there has not been one instance, not once has it happened, where the S&P has experienced a negative return 6 or 12 months following the midterm elections. Imagine that. There hasn't been a negative return 6 or 12 months following midterm elections since 1962. I don't think it's happened since 1939, to be blunt with you. But post-midterm elections, the S&P 500 outperformed the market in a 12-month, 1 year later, after the midterms, with an average return of 16.3%. 16.3%. Now let's take let's take that on the surface, terrific, right? So, but let's take a look at it. What's the Nasdaq's down at least 27% from its highs, which was pretty much December of last year. S&P's got to be, it was 18. It's probably more than that after yesterday, but let's think this through. Let's say we go into, let's round out the numbers. We go into the midterm election, S&P down 20% since its highs. If a year later we get a return of 16%, if we hit the average, you've just about erased that bear market and break even. That's pretty good. It's extremely good for people who have been at income averaging their monies into their 401ks, and they're buying low as well as they bought high. That 16% is going to be dramatic, right? For those who got out of the market and then decide to get back in, let's say, we were selling back in February, that is even more, the impact is even larger. We've gone over this before. It's like if the market goes down 10%, you have $100, it goes to 90. If it goes down another 10%, you're down 19. But if it goes up 10%, and then another 10%, you're well below that 100 break even, right? So it takes a lot more to recover that. That's the decay factor. So either or, that's a pretty good number to think about. We need to start bringing that into our trading analysis, and we should be on the watch for stocks that may be historical on this positive return. Not all stocks are going to fit into that category. And our next report, we're going to go over that a little bit even deeper. I want to talk about how we're going to use some fundamental analysis. We're going to go over some stocks. We're going to give you some real-time examples. But this is pretty good news. Will it happen again? I don't know. I'm not in the prediction business, but I will say from a statistical analysis, we should be aware of it. Okay? Let's see if I can go to pick up the table here. It's a little bit, let's see if we can get this. Okay, this starts in 62. The performance before the midterm, 12 months, minus 17, minus 13, minus 14. This goes from 62 to 2018. Minus 31 and 74. Plus 28 and 86. Minus, plus 20 and 98. Anyways, the average non-midterm, plus 10.7. Midterm average, 0.3%. That's prior, 12 months prior. Now we look at post. Let's go 3 months, right? There's some positive numbers, 17, 18. Looking out, there's a minus 1 here in 94. It's plus 16 in 98. What about 2002, 2006? Pretty small numbers there. So the last, 20 years, 4, 8, minus 1, minus 0.3. So not as dramatic, right? So anyways, 3 months afterwards, midterm, plus 3, plus 7. Historical average, plus 3. That's a pretty good number if you're going to double what you typically have, right? Okay, so let's go 6 months. 23%, 24%. Let's see, the last 20 years, 3, 8, 15, 3, 8, 9. So the midterm average, 15%, and non-midterm, 4%. How this happens, I don't know. Why it happens, it's really interesting. I'm going to do a little more digging. If I come up with something, I'll let you know. But this is pretty good data. All right, let's 12 months, 62, 30%, 29 in 1990. Let's see, the last 20 years, 18, 12, 6, 3, 12. All right, 16.3%, the number we gave you, the midterm average. 6-point historical average. Well, there was this fellow, Bob Brink, when I was young. I used to listen to him. He had a newsletter, and a pretty savvy guy, and you may remember him. But with that said, he had always said that gridlock in Washington, what is gridlock when both sides can't really agree, and he said that always seems to be a positive outlook for the stock market, because the stock market doesn't like radical change and it likes the status quo. Midterm, nothing gets, pardon me. When you get gridlock in Washington, nothing really gets accomplished, right? And the market can look forward and say, nothing's going to change based on blah, 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 fundamentals, technical, whatever. Things should continue. Well, maybe midterms, you get more of a balancing in Washington, and you start getting some of that gridlock. I don't know. We'll have to take a look at it. It's something for us to be aware of, and certainly some good statistics down the road. So that's our kind of discussion today, right? So we did talk about that chart. Let's take a look. While we got you, let's take a look real time. It's about 11:30 Eastern time, 11:20. I want to we talked about how RSI has been a trading indicator. It's not the end all be all, but it certainly has been interesting. When we look here, the S&P right now is bumping into our down Toomey trend track line. It's getting into that point, and this is the shorter trend line, in the past it has bounced off these trend lines. The RSI right now is 32.1, very low. Yesterday or earlier today, we had the stochastics, our quick oscillator for trends, was down at 0.3. Anything below 10, my antenna goes up and says there's a potential bounce. But it was 9 early end of last week, and look at yesterday how the market was down, big, right? News event driven. Bad news is really now turning the market negative. Okay. The caveat to this is we're re-entering this year-to-date downtrend line, and if you think about that, we've got a lot further to go to meet the lower baseline here that tracks down here somewhere. We talked about this before in our weekly report. The supply line, these month of sideways movement, and we're just about there. At the bottom of that supply line. We break that, I think we're going to go, drastically lower. If we hold here, might get a bounce. The RSI may come into play. It's hard to say. Let's look on the short side. The short side of the SPY, which we're still holding our short positions. That trend since bottom of mid-June, it's been in an upward trend, right? The RSI is at 67.9. It's starting to bump up into our Toomey trend track line here. It may get to a situation where we're getting it over bought, and we might get some. I can't move that trend line. We might be able to get this moving in the opposite direction. The MACD is way up at positive territory, healthy, nothing bad there. Same thing with statistics, nothing bad there. So the potential for us to continue at a high RSI is there based on the sentiment of the market, but we just don't know. And we'll see if the RSI holds and we get a pullback. But right now, we're holding our stocks. We're going to update through our alerts. That's at ToomeyStocks.com, the number 2MEStocks.com, about where our stops are going to change because the market is moving in a certain direction. TBT, short of the 20-year Treasury, has yes, this is a very narrow trading range that it's been on this upward trend, very narrow. And yesterday we did bump in right to the bottom. At the end of the day, there was tremendous selling that came in. And today, gap up, and it's off to the races. And our RSI is now 66, whereas yesterday it was a low of 57. So this is running a high RSI and still continuing to go. We are in a little bit of a breakout session here. How far it goes, I'm not too sure, but we're still holding those positions, and we'll be in that alerts that you'll be getting via email. If you've signed up to ToomeyStocks.com, the number 2MEstocks.com, you'll be seeing our changes there that we want you to put in place. So that brings us to today's segment. A little bit of good news. If there's some questions, email me at info@ToomeyStocks.com. We'll get right back to you. If you have inquiries on a particular stock, I'll try to give you some information that I see, and some statistical as well as maybe some fundamental, depending on what your question is. Any input on previous segments or what you'd like us to talk about, or you have some questions, let's get on it. We'll get that back. Last couple of impacts input was towards a little bit more on our trading strategy and how we set up and do that. So I gave a little more of that in the last couple of video segments, and hopefully that has helped. Follow me at ToomeyStocks.com on Twitter. We're on Facebook and Instagram. Toomey Stocks is a good way to look us up, or Toomey Stock Report on the web. And of course, YouTube, we've got quite a few historical videos out there as well. That's a little bit of hopefully good news. We'll see where the trading brings us, and look forward to catching up with you on our next video report. This is James Toomey.